Welcome to Pig Pods. We give you actionable insight and stories behind real-life success wherever you go. Here are your hosts, Angelos and Mo.
Welcome to Pig Pods, your success podcast. I'm Mo.
And I'm Angelos. Today we will be looking at the November 2017 budget and what that means for businesses as well as property investors. We are privileged today to have an expert in tax strategy, Gordon McCaw from Mark Holt and Co. Gordon sees the budget as an early Christmas day with lots of presents for him.
So thank you, welcome Gordon, and thank you for joining us.
Yeah, thank you for having me.
So Gordon, please give us the headlines of the budget and then perhaps we can dive into some of the key points.
Yeah, well, first of all, I would say that whenever I came down to open my presents on budget day, I didn't feel like someone had crept in and stolen my presents, because I do look forward to budget day. It's it's one of those big events. But that said, I've had 3 Christmas days this year, so in some ways, I've got plenty of new toys. Unfortunately, yesterday there wasn't that much meddling, I would say, but there was some changes, some minor subtle changes that alter things but don't add a huge amount of complexity, which I was in some ways I was relieved about. But in terms of the main changes that were out there, I'd say if anything it was what they didn't change that was most important. So I can talk about the different things. I'd probably start with landlords, if that's okay. So if you've got a property business, the reality is you might have been preparing to pay more income tax on your interest payments. That's still with us, unfortunately. You're still going to have to do that. I was slightly nervous that the government would introduce some measures to stop people incorporating their property businesses, meaning they'd be trapped with these new horrible charges that are really going to mean some property businesses are going to go out of business. People are going to have to start selling properties. Unfortunately, they've left in the important reliefs for capital gains tax and stamp duty land tax, so we've still got the ability to incorporate.
And was there any indication that might change in the future, or have they left it very much as is?
Nothing that was there. That said, we've got some draft legislation. We've got lots of notes, publications about things that have happened. I've read through all of those, but in terms of an actual Finance Act, we don't get that for a while yet. So there could still be some legislation that comes along at some point. Whenever I read through all the documents, there's some interesting references. There is one very bland statement that says we're going to close down a stamp duty land tax avoidance measure, something like that. What is stamp duty land tax avoidance? Does that involve transferring your property business to a company? For me, no. There's nothing in there to expand on that to make me worry about it. But at the same time, who knows? And that's now. What's going to happen in another year's time? It could be that they observe more and more property businesses incorporating, and for me, now is the time for any savvy property investor to be thinking about incorporating their business if they're leveraged to a certain extent.
And just quickly on that point as well, how would it impact the incorporations that are already underway? If they did bring something in, you would still be allowed to continue as you were if you started the process? Well, yeah,
it's kind of a cut-off point usually. So sometimes what they'll do is, for example, there was some talk in the press that what they would do is for second homes they'd increase the stamp duty land tax rate from 3% to 5%, and what they often do in those sort of situations is they say we'll increase this from next April, and that means lots of people buy properties in the next few months and they get a big bump sort of to their coffers. If they perceive that there's an avoidance, some tax avoidance that's going on, or something that's costing them too much money, like for instance property businesses going into a company, then they do bring in the rules immediately. So that was my concern, that we would wake up, it's Christmas, bad news, they've taken away this valuable relief that's actually going to help a lot of people stay in business, which then has a knock-on effect to the people who actually live in those properties.
So talking of stamp duty, there was a massive announcement when it came to stamp duty. Can you give us some of the pros and maybe potentially some of the cons there, Gordon?
Well, so we're talking about the new relief for first-time buyers. So it's if you're buying a property and it's worth less than 500 grand, then there's going to be a relief, an exemption on the first 300k. It's one of those ones that I look at it from a tax planner perspective, as someone whose job it is to help people save tax, and I think, that's great. I work with government incentives, and if someone comes to see me and they say, yeah, I'm buying a property for the first time, I can say that's great. Potentially you'll be able to pay less stamp duty land tax. That said, I look at the new rules, and I drove to work this morning and I thought to myself, what is a first time buyer? And I got into the work today and I looked up the new legislation that they provided and I read through it. And I said, okay, so a first time buyer is someone who's never ever owned a property before, never done any sort of land transaction. You're going to have situations, I think, where there's two people, man and woman, man and man potentially, coming together, want to buy a property, one of them's a first time buyer, the other's not, and they potentially won't be able to enjoy this interesting relief. Going wider than that and talking in more general terms about it, I look at it and I think about two different people going for a property. One's a first time buyer, he's got a budget of 250 grand. The other one's some people with a young family, they need a bit more room, lady might be pregnant, they've got a budget, same amount of money, 250 as well, but they've already got a place. And I think to myself, what's the distinction? What's the difference between the two? Why are we saying this first time buyer deserves to have some relief and the other, the family, doesn't? And I can't see any good reason for that.
Being a cynical person as I am, Gordon, could it be a political ploy where they might want to necessarily appeal to generation rent type people, potential Labour voters who feel perhaps a little bit aggrieved that they aren't able to get onto the property ladder as quickly as others?
Yeah, I share your cynicism. I also think it's meddling, and I feel like I look at the example of the Republic of Ireland, and I see what they dabbled in go back a few years ago. It's almost social engineering to a certain extent. You bring in a situation where you punish people, landlords, and then you find yourself in a situation where property prices collapse or people can't afford to get in the property market. And over there they've got to a point now where they've even got incentives now to attract landlords, full reversal. And I can't help but think that they should probably just leave the property market alone. One of Philip Hammond's comments, or it was in one of the budget reports, said we need to fix our broken property market. And you kind of think that's the way they're looking at it, and it's troubling in a way in a free market economy. That they're getting that involved and they're bringing in all these different measures that have a artificial effect.
Did they say how they were going to pay for the reliefs that they're giving on the first time buyers? How are they going to fund that? Because obviously that's a huge amount of money they won't be getting.
Yeah, it's huge. I agree. Some of the numbers are very big, and I thought, like you, they'd be saying, on one hand, first time buyers get this relief. On the other hand, we're putting stamp duty land tax up for somebody else. There wasn't anything like that. Normally it kicks one person, and I think maybe they got to the point where their ratings have slumped so much that they're terrified of kicking.
Or maybe that they've just made so much since they brought in the stamp duty and tax, since they brought in the extra 3% that they're
Yeah. Well, it's one of those. It's like we mentioned previously. Growth forecasts are down. There was a lot of complaints about productivity in terms of the UK and things that need to be done to make us more productive. So this sort of giveaway doesn't fit in with those sort of complaints.
What about your average man on the street, Gordon? What are they likely to see as a positive for them from this budget?
Well, average man on the street, I even look at myself, if you like, that average man, and I see my personal lines going up, I see some other tax bands going up. I did a quick calculation, I'm going to be about £20 a month better off. That feels okay. At the same time, inflation's going up, interest rates are going up. I'm not seeing a lot of benefits. As a family guy, I'm sitting back and thinking, have they forgotten about us? We've got the elderly who seem to be well looked after. We've got these new incentives for young people. For those of us in the family bracket, there wasn't any real incentives or beneficial measures there for us. There were some other changes for landlords. They were kind of around the outsides, if you like. As things stand, if you sell an asset, you then don't have to pay your capital gains tax on it until the 31st of January, which follows the end of the tax year. Got a bit of time. Going forwards, you're only going to have 30 days to pay over the tax. The tax man, doesn't make a huge amount of difference, but your cash flow is going to feel a bit of a hit in that respect. So that was the other sort of CGT change that was around the outskirts of it too.
Businesses?
Yeah, so on the business side, there was a few things that changed. I'd say one of the interesting ones that sometimes we forget as just pure tax specialists is the national minimum wage. So that went up to £7.83 from £7.50. To me, that's a bit of a stealth tax, hits businesses, and they're the ones that are having to fund that. So there is that side of things. R&D relief went up by 1%.
So just sorry on that point, is there, so I'm not really up with the wage part. Is there a minimum wage and a living wage, and they're distinct?
Yeah, there is indeed. So yeah, absolutely, they're all about making sure that everyone's got a fair amount to live on, which is great, absolutely.
And do they produce both of those in the budget? Do they say guidance for both?
Yeah,
they set them.
They do indeed.
Yeah.
And what I would say is it's one of those ones where I think again you have two ways to operate an economy. If people don't have enough money, you either give them tax credits or you take the money out of the businesses directly, and that's what they seem to be doing at the minute. So it's a different way of getting money in the same pockets, but maybe politically different. And R&D tax relief's the other one. Sometimes I talk about R&D tax relief to people and they shut that and they think, I'm not interested in that because I'm not a man in a white coat, I'm not travelling to the moon. But the reality is, R&D tax relief is really just a new ideas tax relief. They call it R&D. Research and development is more in general terms. Some of the people that I've worked with to help secure this sort of relief, it's even been in construction. I helped one business who developed a movable shelter so that their team can work outside. They got R&D tax relief, so they got repayment from the government for that. I've worked with a dairy in the past and they developed a new product to make, or a new ingredient that helped their dairy products last longer on the shelves. And there's lots of other different sort of scenarios as well for many businesses. I call it new ideas relief. I don't like to call it R&D relief because then the brain shuts down. There's lots of opportunities out there. It's gone up by 1%. There was other commentary in the budget about we're really going to try and push this further. So I say that anyone who's in business, who's got a new idea, come and talk to me.
And I suppose people think, I certainly think about inventions and mad professors sitting in their garden shed. But could it even be if you're taking something that's applied in one industry and moving and shifting it into the industry you work in, to like change its use slightly, and that could still apply?
Tweaks don't always qualify. I think what's important to think about is that yes, in theory it can do, adaptation does qualify for the relief, but it is about how much you spend as well. So broadly, if you spend 10 grand, say, you get a check back from the government for sometimes up to an extra 26%. So yeah, it all depends on what you spend. So if you're just adapting and tweaking it, it's not a huge difference.
Okay. There was also mention about the VAT threshold, Gordon, staying at 85,000 for 2 years. Now, why would you say that unless something's going to change potentially?
Yeah, absolutely. So even before we got to the budget, we had a consultation document that the government released, which talked about the potential that this would happen. And even this week I was having chats with people and we were thinking, well, maybe it's just going to happen. And we were expecting him to say something about it, and he did. He did actually say. He mentioned that in Germany the VAT threshold is I think it's 16 grand compared to here where it's like say £85,000. So to stand up there and say, look, we've noticed there's a difference between the two, and it's going to stay the same for 2 years. It doesn't say to me that we're definitely not going to do something about this.
So what do you think some of the consequences could be if the VAT threshold is dropped?
That's an interesting one because it means that your tradesman, if you like, the one who earns less than 85 grand, who comes in and fixes your pipes or does a bit of work around your house, is going to have to come in and charge 20%, 20% extra, which means price inflation, which means people will say, would you like to take cash instead? And it creates a lot of different interesting challenges. So it's an interesting one.
It's also pretty inefficient, isn't it? If you've got a tradesman in that example who's having to spend a proportion of their week doing or their month doing the VAT return, having to keep records for all that stuff, you're losing a lot of productivity there.
You are, especially we're moving into making tax digital. So the VAT returns are going to be filed quarterly. So you'd have a man, you're right, who's a tradesman who's going to have to get up to speed with that sort of thing, file his VAT returns. And also I feel like that is a tax on the consumer. The end consumer is the person who's got to pay that. The man doing the work isn't going to take on the 20%. It's going to be the person in their house. So again, I see not just family man, but every man and woman out in the street getting punished.
So we heard an interesting thought the other day, didn't we, Angelos and I? This was scrap all tax except VAT.
Yeah.
And maybe even put it up a little bit.
Well, personally, I wouldn't like that to put me out of a job. But
simplify the tax system, but basically just tax on spending. And the more people spend, the more they get taxed. If they save, they don't get taxed.
Yeah, it's an interesting one. I think I have thought sometimes about how you could simplify the system. And I guess all the different incentives and reliefs and things like that I work with, it's all about driving different parts of the economy and moving things around. So I said about meddling earlier, but sometimes that meddling is necessary to incentivise different areas.
Necessary meddling.
So yeah, even things like something called the Enterprise Investment Scheme, which is all about attracting people to put their money into small companies, which then push on and develop, employ people. So
for smaller companies and one-man band, for example, and if the VAT threshold does drop considerably, what will give them any distinction over the big players in the market? Their competitive element, not being able to charge VAT to the end consumer, is suddenly being removed.
Yeah, it's really interesting, that. You're absolutely right. So unless they can make economies on some other level, then people are more likely to go with the bigger boys, if you like.
And also, if you're going to have such a low VAT threshold, what's the significance of having a lower level at all?
Well, I think there's
over a year, that's 25, or as you said, in 16 in Germany.
It's about 15, 16. Yeah,
it's not a lot of money, is it, over the year?
So pretty much, I think in some parts of the world as well, you just VAT register as soon as you start. So pretty much 20% is going to the top of everything you do.
And one last thing on the VAT, that you mentioned there was a consultation that's gone out.
Yeah.
Does that I've heard that just kind of it goes out to a lot of big businesses, but a lot of the smaller businesses aren't as involved in that process, and so
it's public, and everybody can chip into it. It's but it's one of those ones, like you're right. Who knows about it? The only people who know about it are big organisations.
So basically, is the government just warming us up? Maybe a tax full play, shall we say? Just getting us ready in a few years for this big announcement.
I agree. It's foreplay.
Yeah.
Don't get Gordon too excited. We've got to finish the podcast.
Okay, Gordon, we also had a big announcement about 300,000 new homes being built. Can you explain a little bit about what the government's thinking is behind that?
Well, so it's been all over the press recently, hasn't it? There's not enough place for people to live, so some of the stuff that they published, there's quite a lot of information on housing and new housing, and there's going to be incentives from small, medium enterprise-based developers. So it sounds like there's going to be deregulation. One of the things they talked about was why there was lots of land that was being purchased, planning permission was being acquired, then it was just being held on to. He seemed quite cynical when he was talking about it, almost in the sense of is it being held on for technical reasons or just for a commercial reason. So all of it sounds really positive to me. I think if you're someone who's looking to get into business and you think property development, or even the situation where you're seeking planning permission with a view to selling on a bit of land, it sounds like there's an opportunity there. So for the people who are property focused and thinking about do I do a property investment, property development's starting to sound interesting. There's, like I say, incentives and opportunities.
I feel like there needs to be more incentives for bringing existing properties back into use as well. I certainly drive around in Plymouth and see a lot of empty houses, and I know there's empty home loan schemes and things like that, but I feel like that needs to be brought back a lot more.
Well, we're seeing the imposition now of a penalty if you don't necessarily bring back your property into use. So if you have an empty property, you will be charged council tax. See, my view on that is that rather than punishing, because we haven't had the full details yet, but rather than punishing a landlord or whoever it may be having an empty home, give them an incentive. Perhaps they don't have the money to do up their house and put it back on the market. Give them a funding, whatever it may be, rather than just saying, right, you can't afford it, we're going to give you an extra council tax as well.
Force you to sell, that sort of thing. It was interesting to go back quite a few years ago now, but with business rates, they brought those in for empty premises as well. I remember driving into London back a few years ago and someone had knocked down a building and they put a big sign on the outside of it saying, "Thanks very much, Gordon Brown." So do we get into a situation where people start knocking down buildings because they would rather hang on to the land than be forced to sell them? I don't think so, but again, potentially forcing people to sell assets that they're not ready to sell.
Yeah. I know Philip Hammond has been accused of being a bit dry and not necessarily having a lot of humour, so I just want to throw out a joke that he cracked in the budget. So I know the Chancellor is very keen to encourage electric cars and moving forward with these kind of technologies, which I think is great.
Yeah.
So the Chancellor has unveiled extra funds and tax incentives for electric car drivers. That includes a new £400 million charging infrastructure, an extra £100 million in plug-in car grant, and £40 million in research for charging. And he went on to say, "I know Jeremy Clarkson doesn't like them, but there are many other good reasons to pursue this technology, so today we step up our support for it. Sorry, Jeremy, not the first time you've been snubbed by Hammond and May."
Yeah.
I mean, I don't know who wrote that, but my God, they're in the wrong career.
Yeah, it is a little sort of joke that we have sometimes in the accounting and tax industry that Jeremy Clarkson is the man who's pulling the strings in the economy. Kind of fits in with some of the decisions that are made. No offence, Jeremy. But one of the other things that they suggested was, in terms of electric cars, what you can do is, rather than being a benefit in kind, if you charge your car at work, you'll be able to do that on a tax-free basis, which again it's a positive sort of step in the right direction, I think. But yeah, it'll be interesting to see how far and how fast those changes get implemented.
Yeah. All right, Gordon. So just in summary, then, an okay budget, nothing too drastically painful for anyone really. A safe budget.
Yeah, it was a safe budget, like you say. There wasn't anything particularly exciting in there. At the same time, I think what we need at the minute is certainty. We've got Brexit. I'd almost hoped that he would stand up and he would say, Brexit is coming along. We're not going to make any radical changes. We're going to have complete certainty the next couple of years. Don't need to change anything. We didn't get that. We got a bit of meddling, but at the same time, we've got at least some certainty, hopefully until the next budget next year, next autumn. So yeah. In terms of, if I had to give it a mark out of 10, I'd probably give it a 6 from a tax advisor.
Can try harder.
Yeah, could do better. Yeah.
Brilliant. Well, Gordon, thank you. You guys have heard what Gordon has to say and what Angelos and myself think. But we want to know what you think about the budget and how it's going to affect you. So drop us an email on hello@pig.network or get in touch on Facebook, Twitter, or Instagram.
So thank you again, Gordon, and thank you for you listening at home to Pig Pods.
Thank you for having me.
Your success podcast. Please click subscribe, leave us a review, and we will look forward to your comments in the Pig Pod Facebook community. I've been Angelos.
I've been Mo. See you again on the next exciting Pig Pod.
You've been listening to Pig Pods. Click subscribe for more incredible content. More details can be found at www.pig.network.